Can momentum stocks actually have less volatility? We'll take a look at 3 stocks that could fit that bill. Can Nvidia win back Wall Street? The AI chip giant has a big event. We'll have a preview. And which high-profile investors have been selling their Bitcoin? We'll look at all those stories in this week's Market Moves. Let's dive in. All right, let's start with the stock market, where the S&P 500 has now officially corrected. Investors had been riding a wave of momentum before the recent roller coaster. Interestingly, though, you don't necessarily have to choose between momentum and low volatility when it comes to individual stocks. That's according to Bloomberg research, which found there are a number of companies that score well for both momentum and low volatility. Some examples: Cisco, Walmart, and Visa. As for sectors that score well for less volatility, those would include utilities, consumer staples, and financials. Now, on the other side of the fence, a stock that has seen a great amount of volatility recently is Nvidia, and the AI chip giant is now hoping to wow the crowd with its latest product roadmap. The company says it will be sharing that at this week's developer conference. By pushing the innovation envelope under its visionary leader Jensen Huang, Nvidia's stock price rose more than 25,000% over the 10 years leading into this year, according to industry data. But this year, Nvidia's stock has struggled, and that has been particularly painful to investment funds that hold more than 10% of their assets in Nvidia's stock. According to research from Bloomberg, more than 90% of those funds have underperformed the stock market benchmarks since Nvidia shares hit their all-time highs back in January. And finally, on the subject of big investments, Bitcoin had a big year in 2024. Part of that was tied to the successful launch of so-called spot Bitcoin ETFs in the US. As it turns out, though, some of the big buyers of those products, hedge funds, may have been some of the biggest sellers more recently. That's according to new data from Bloomberg. The data suggests that hedge funds made up nearly 10% of the ownership in US Bitcoin ETFs coming into this year. Investment advisors were the second largest holders. Bloomberg notes that based on the buying and selling trends, advisors may end up being longer-term holders than hedge funds. All right, those are our market moves for this week. Thanks for watching. What market moves are you watching? Let us know in the comments. And don't forget to subscribe so you don't miss our next investing video. See you next time.